to this day. I mean, no matter this thing now is going on for 2 months, like on Monday, you could read all sort of like nonsense going on. And what's scaring for me to a certain extent is that not only this is becoming a missed opportunity, but it's becoming a dangerous situation with a lot of people that they believe that what is being told to them is grounded.
Wednesday, January 28th, 2026, Monaco 64, home of alternative economics and contrarian views. I have the pleasure of speaking with Dario today. You can find him on X or Twitter at just Dario, and the handle there I think is at Dario CPX. Dario, welcome back.
Hello, hey Mario, thanks a lot for having me back.
Yeah, it's always nice to speak with you. I think this is our third interview, and the last interview uh, was December 9th, and silver was trading around 60. And the title of the interview that I wrote on YouTube was Major Silver Supply Disruptions Could Send Prices to Unimaginable Levels. And here we are, January 28th, and silver is above 114. I think the high recently was 117.70, so we haven't made a new high, but we're also seeing gold catch up. So yeah, what have you seen since we last spoke? And you told me as well you want to talk about three things concerning silver and the markets. So I'll let you start.
Yeah, there's a thanks a lot for having me again today. And what I saw so far, I mean, there have been like you brought a lot of like guests in your video, like very knowledgeable, explaining like technicals, how the commodity markets is working and so on. There are in general, like people like yourself, or not many people, to be fair, are doing a very good job in trying to explain to the crowd what's happening. But what I noticed since that interview, and honestly, since even before, is the incredible amount of not only misunderstanding, but misinformation that is being spread throughout social media and mainstream media about the matter to a point that I think we can fairly assume this is one of the biggest missed opportunity so far by the broader investor base to a certain extent because of the way that they have been misled till to this day. I mean, no matter this thing now is going on for 2 months, like on Monday, you could read all sort of like nonsense going on. And what's scaring for me to a certain extent is that not only this is becoming a missed opportunity, but it's becoming a dangerous situation with a lot of people that they believe that what is being told to them is grounded, and they are trying to trade silver in a way that expose themselves to financial damage rather than an opportunity to not only making a fiat money system profit, but to protect themselves for what is effectively happening into the monetary environment.
Yeah, and I mean, I've seen the same. It's kind of seems to have slowed down a bit, but especially the people who follow cryptocurrencies or Bitcoin, they're saying, you need to short silver. I even got an email from someone that I'm not going to name names, but telling me, oh, so and so thinks silver is going to correct massively. Do you want to speak to this person? And I replied and I said, well, I don't agree, but you were talking earlier about the margins on Comex that they don't seem to be working and that they keep raising them. I saw someone also post on X, why don't they just raise it to, 100% already,
Well, this is a very important topic that I've been trying to um, explain to people what's happening. And it's difficult because, to a certain extent, it's counterintuitive. In the past, like from the Hunt brothers to 2011, every time that the Comex intervened, changing the rules on trades execution, lots, and margins was effectively for the benefit of the bullion banks to clamp down on volatility and to protect the overall status quo of the system. However, what happened right now is the opposite. The COMEX is currently protecting itself from the overall situation. Why? Anyone that has been tracking the votes at the COMEX cannot deny there has been a massive drain of physical metal from its vaults. As of today, the registered amount of physical silver available for physical settlement of silver future contracts at the Comet is roughly 112 million ounces. The total amount of silver future open interest outstanding is roughly 162,000 contracts, equivalent to 810 million ounces. So we are getting closer and closer to a point, something that many people have been warning about for years, but for a reason and another wasn't happening because there was a lot of silver available above ground. But what people ignored is how fast the demand for silver was growing, how inelastic is the supply of silver, and how inelastic is the all the supply chain for silver, because it's not just enough to take it off the ground. You need refineries, you need transportation, and all this process in order to arrive to the ultimate 99.9 level of purity that is required by industrial companies for their to make like solar panels, batteries, jewelries, semiconductor components, electronic goods, and all sort of things that you need silver, because let's not forget is the element in the periodic table with the highest level of electricity conductivity. So the COMEX without physical silver effectively becomes a paper market, a pure paper market. But what's the point of a commodity market if you don't have the commodity, right? Furthermore, the CME is a listed companies. They have shareholders, they have other venues and whatever. And what people tend to ignore is that if the authorized participant on the CME fail to clear and they have outstanding position to an extreme scenario, ultimately the exchange will be exposed to losses. So what happened is that the CME changed the margins calculation in a way nobody, including myself, had in the back of their mind. They changed from absolute amount to percentage of the notional. And today, they increased that margin from 9% to 11% of the notional initial margin and then variation margin per silver future contracts. They also did the same in different proportion for gold, platinum, and other commodities. So let me try to be simple here. This change protect the CME because effectively you are not going to have, with the increase in volatility before, there was an implied increase of leverage overall in the system to a risk that open position wouldn't have enough capital behind to be settled. Now they build a significant buffer based on the current volatility level that doesn't allow, it makes it more expensive to hold significant amount of position, especially short position, if you're not there committed to close your trade. Furthermore, because it's a percentage of the notional, the higher the price goes, the higher the margins you will have to post immediately. They will not have to wait for the Comex to make an announcement, oh, we increase from 25,000 a contract to 25,700. No. Every single day, there are two margining operation at the Comex during US hour. There is the intraday operation and there is the end of day operation that margin calls and imbalances need to be settled by the opening of the following day. And this now happens automatically. So if you hold short position at the COMEX, the higher the price goes, the larger the margin that you need to put at the same time that you are underwater. So increases the risk of you to being forced to close that position because you don't have enough capital to post against that position. While on the other side, since months now, it's clear that whoever holds a long future contract at the COMEX is there because they need the physical. In the month of January, as of today, the amount of contracts that have been issued, delivery notice, and they've been accepted for physical delivery is above 9,600 contracts. That is almost 5 times than the same amount of January 2025. And usually January is not a big month for delivery. The big months usually are like March, June, September, and December. So this is quite telling. So on one side you have people that want the metal, so you increase the margin for them, no problem. We're gonna pay 100% anyhow, so it's not a problem for us. But on the other side, you have people that actually hold the short position more often than not as an edge against long position. I'm talking about the bullion banks on other venues like on LBMA. But as I explained, I remember, I believe in the previous video, those long position, they are usually compensated by, on the other side of the trade, by miners that they want to sell. They want to edge the price risk of selling their mining production many years forward. Those miners, they already have clients that are going to receive the physical. They're not going to deliver their physical to the banks. All they want is the cash difference. So the banks are not going to get the metal there, but they have to deliver the metal at the COMEX. This is effectively what is creating the physical silver short squeeze because the above the ground silver, all the, I mean, I see people posting, oh, the market cap of silver now is above Nvidia, just below like gold. I mean, that's consider all the silver taken above the ground and mined since 1846, if I'm not wrong. I mean, that silver is not in circulation more. It's different from gold that is stored in vaults and whatever, and very little has been dispersed. Silver is all around us. It's in electronic components. It's in like cars and whatever. And it's not in big quantity. It's in small quantity. It's in grams. It's in milligrams. So you cannot take it out and recycle it very easily. So ultimately, that's what I said immediately. People are saying, "Oh, the CME increased margin again, like oh, they're gonna like kill the speculation, whatever." There is no speculation here. People need the physical. The problem is for the naked short in the venue. And again, today, as soon as the announcement went out, what did you see on the price? The price started to go up because people need to close those position. That's effectively what's happening.
Yeah, and you spoke about the CME being a listed company. And I remember because I worked as a futures and options broker from the early 90s to 2012. I remember in the beginning, all these exchanges were owned by the members who were brokerages. I mean, I even looked into buying a seat on the Life Exchange, which used to be the London Financial Futures Exchange. But now, as you said, it's owned by major shareholders, and they're not going to favor the bullion banks. they're going to look after the interests of their shareholders, the CME and other exchanges. So I think that's a huge change during the Hunt Brothers event as well. Yeah, members on the and the biggest members were probably the bullion banks, but now it's not so. One question I have though, and because we've seen that China, you talked about earlier about misinformation, a lot of misinformation out there. We saw that China announced these export restriction controls or controls from January 1st. And we've seen that Eric Young or King Kong 9888, he's looked into that uh, in detail, and it is going to make a difference. But in the mainstream, like mainstream institutions like Bloomberg, they're saying it's not going to make any difference. The other thing as well, Dario, we don't see anyone talking about what you just talked about, the supply. All we hear is that it's a mania and that retail is driving it. Why do you think that is so? Is that because they have an agenda, or they're just ignorant and not looking into uh, the market properly?
Okay, so this is a great point. Let me tackle it one by one. First, China. People are ignoring the fact that currently the level of physical silver reserve at the Shanghai Gold Exchange and the Shanghai Future Exchange, the last time I checked, were at the same level of 2016. The demand of physical silver at 2016 was a fraction of what it is right now. So effectively, China found it itself in a significant shortage of silver. Now, what do you do in this kind of situation? Do you close the factory and fire people, or you retrench and you protect themselves and you try to get them all the silver that they need to remain operational? This is effectively what China is doing. And as of now, I heard from my sources that there is even a level of prioritization of the type of companies that are receiving the physical silver that is in a of big restraint. The one with priorities are the one with more of a strategical economic importance and medical. Like jewelry is at the bottom of the pecking order. Furthermore, I have very reliable contacts here in Hong Kong that told me that so far, and this is information from a few days ago, so far from their side, all the information that they receive, they've always been like very reliable, is that no physical silver in January has been allowed to be exported yet from China. Furthermore, actually, Eric, that you just mentioned, posted another very interesting feedback that even at the Shenzhen Shuibei market, there has been no delivery, no onshore delivery from the Shanghai Gold Exchange or Shanghai Future Exchange into the Shuibei market for physical silver demand. So this is a huge impact. People are like, they look at the chart. Oh, China mining is only 13% of silver overall. Well, yes, but China, similar to rare earth, they have the bulk of the refineries, especially those for industrial purposes, to a point that up to 70% of the silver refined every year has to go through China. And actually, China was one of the biggest exporters of silver exactly because of that, till very recently. Why refinery is important? Because answering to your question on the supply of silver, what people do not understand is that because silver price was kept so low for so long, there are very, very, very few dedicated silver mines. Most of the silver is mined as a byproduct of other more profitable operations like copper, zinc, or lead. So you have this big ship with a lot of you know, mined rocks that are shipped to China, and the process to separate all the various elements, ultimately combining them into the level of purity needed for industrial purposes, is extremely, um, you know, intense and expensive if you don't do that efficiently. Reason why the refineries are in China. And with China now, that is effectively like putting a serious control on the export of silver till they fix their internal situation. This is soon going to reverberate across the world. And we already see that. I mean, physical silver is being taken out like now almost on a daily basis from the Comex and according to very reliable report from the LBMA. And the strain of physical silver is so strong that the bullion banks are literally riding the physical silver ETFs that, contrary to what you would expect, the shares of those ETF are not rising at all. Actually, as of today, from the end of December till today, 20 million ounces of silver left the SLV ETF during the rally. So this is of incredible repercussion across the globe, and people don't understand. People like, in particular, those that just like look into the space, or maybe they just have some like scrap silver at home. And they go to their local dealer and they're like, "Oh, I have like 500 ounces of silver. I want to sell it." And then they're like, "Oh, but I cannot sell it." The dealer says no. I mean, these all these like local shops, they were used to deal like few coins a day, like a bunch of coins a day, like not significant amount a week. So you go there with 50,000 US dollar worth of silver, or someone like yesterday on X posted, "Oh, I cannot sell my 5,000 ounces at my local dealer." I mean, that's $500,000. Who has in a local shop that amount of float cash into their bank accounts? So, as a matter of fact, because of this extreme bid from corporates, this is actually being putting strain on the retail side at the moment. Okay, so that's why there are premiums, but that's not the same across the globe. Here in Hong Kong, in China, in Japan, the bid to purchase silver, even at retail sizes, is a premium. So they pay you more because they want it. Okay, it's still different in the US on a local basis because, as I tried to explain on um, yesterday morning, for me it was Monday night. I'm like, here is industrial demand. They need to take all these coins, they need to melt it, they need to refine it, they need to make it into bars and ship it somewhere else. All of that has a cost. Still, there are 99.99 bars available around. They are running out of it. When they are the point of running out of it, then you will start seeing such a huge demand for whatever silver is left that even in those parts of the world that have no significant industrial production of silver, you will see the discount turning effectively into premium for retail type of silver and for scrap type of silver. So all this all this explained so far, it is not getting into the mainstream. Like people that are supposed to educate them are actually doing such a bad job. And this is the problem. This is perhaps the first time that a fairly large retail crowd is actually trying to short something. As I said, I don't remember this. I don't remember, like, from the, like you said, the crypto bros. And I mean, I always been transparent. I bought some Bitcoin a long ago simply because mine was a monetary view, like limited supply of something. They're gonna print a ton of money. Is gonna lift the tides of everything that has a limited supply. Happened to Bitcoin. I've never been really a believer of Bitcoin going to 1 million or 2 million, like some people out there that frankly should buy themselves a calculator with a good battery inside because, I never understood like those kind of like statement, personally speaking. But you see like all these like bunch of like people that effectively COVID turned themselves into traders. Like trader is a profession. It's like it requires technicality. It's a very different type of thing. It's not like you just sit in front of a chart and you just try to time the market. You're always gonna be a loser into this market. Like high frequency trading algorithms of market maker hedge funds, whatever, they always be one step ahead of you, and they are milking you out of whatever position you try to take, and they're the one taking making money, not you. Like the amount of success of doing the trading, especially in very high volatile situations like this one, is worse than gambling at a casino. And you see all these people being misled in like, oh, it's too high, it's gonna crash down. But then when you ask them to all these like, you know, prominent, as I call them now, self-proclaimed expert, like, why? Oh, because the price is too high. And you know the funny thing? I spoke with institutional investors. Institutional investors are currently shorting silver for two reasons mainly. One, because for the third time, it happened in October. It happened at the end of December, and it's happening now. Their brokers are telling them it's a good time to short silver. They don't tell them why. It's just it's a good time. But mostly they are confident in doing this because, oh, this is another GME, is a retail buy now silver. But then you look at the retail side, it's not retail buy now silver. Like what happened on Monday, oh, huge volumes and frenzy in the market and whatever. Yes, let's talk about data. 360,000 contracts has been exchanged at the CME. Guess how much the difference in open interest was at the end of the day?
It was only like 4,000, wasn't it?
Yeah, 3,000 contracts.
Yeah. And also
Like,
the open interest right now is 160,000,
yeah,
which is way below 250, which is what you get
e-
near tops, right?
exactly, exactly. And then when you see SLV, it's like, oh, people are shorting silver. Everyone is shorting. I was like, how are you shorting it? Because I look at the SLV, plenty of shares available. The rate to borrow SLV shares for short sell is currently, last time I checked earlier today, was 77 basis points. Back in October, at some point, it was almost 10%. Now
Yeah.
it's 77 basis points. So what the hell is happening?
Yeah.
And then you look at the animal that has been created by this reckless monetary policy post-COVID, that is 0 day to expiry option. And you saw these huge volumes on 0 DT option that is effectively gambling. Like all these people, if you see the put call ratio of those 0 DT option and very near term expiry option is like 1.4, 1.3 is above one, and then it collapses with
Yeah. So
very low volumes.
for the viewers, 0 day options are just options that expire every day. And so 1.4 in favor of puts in SLV, is it? Is that what?
Yes.
Yeah. And
So
yeah, go ahead.
yeah, the important thing to understand is when the people trade in 0 DT option, like all the delta edging that has been generated by that. So you have huge volumes, like is happening for stocks for ages. Now 0 DT options are the biggest generator of volume in the underlying. Paradoxically, if someone understands derivative, it should be the opposite. The derivative should be moving because of the underlying, not the underlying moving because of the derivative. So all this huge volume, like a $44 billion volume, and then at the end of the day, because all these options expire, poof, goes to zero.
Yeah. I wanted to just add as well about the going to your local coin shop and trying to sell $500,000 worth of silver or 50,000 even. Yeah, that's going to be difficult because there's a difference between a local coin shop and a nationwide, let's say, bullion dealer. Uh, Here in the UK, for example, there's a few online bullion dealers who are quite big, and I follow one of them, and they're paying 5% over spot for you to sell your silver to them. And but if you go to a little shop, local, as I said, and you try to sell 1,000 ounces of silver, now the guy's going to say, well, I haven't got $100,000 right now. So the other thing I wanted to ask you as well about the Shanghai price. There's been misinformation about that too, about the VAT as well. But I heard that the premium seems to be expanding as even the Western price goes up. So where are we now in terms of the Shanghai silver price?
Okay, currently the premium is roughly $17 without VAT. And I tell you, in China, if you go there to sell, they will give you the bid at the Shanghai price, not at the Comex price. And that is without VAT. Furthermore, yesterday, because of this, sorry, on Monday, because of this large retail crowd, like brainwashed, they need to short the hell out of this. I remember at Open, you saw the Comex price that was 106 roughly, while China that day closed at $128.48, and this morning was trading at $131 equivalent. And I put out a warning and I told people, you guys, if you don't understand this, you should stay away from this stuff because it's dangerous what you're doing. And now the price is back at 115 and everyone, before they're shocked and then they become silent. Like, why? I mean, why? Why do you think this is a commodity? So the big the big misinformation that is going on around the space is putting a lot of people in danger. And all these people, they are pushed to lay back on their behavioral biases. That is another thing that I wanted to address because there is a lot of technical speaking, but the social part is not being addressed, in my opinion, enough. Everyone is like convinced the price of silver is going to crash. Then you ask them why. They're like, because it happened before. Uh, okay, what are the numbers saying? The numbers are telling you there is constantly growing demand. There is a inelastic supply. There is a 300 million ounces deficit a year that is becoming larger and larger. And then you cannot bring mines online anytime soon. This is exactly what's happening. Everyone that has been following the space knew that the silver price was incredibly suppressed for so long, but they didn't foresee this. And now, yesterday I was thinking maybe we can even call this to a certain extent a black swan. A black swan is an event that changes drastically the structure of a market and have serious repercussion that was obvious with the benefit of a hindsight, but unpredictable, right? In reality, here is not a strictly black swan because we predicted it, we knew it, we
Yeah,
were looking
yeah.
at the numbers.
Maybe it's a
But
grace one.
exactly. But for the people, yeah, a gray rhino, they
A
call it.
rhino.
But the thing is that for the people that didn't follow this, and all of a sudden they see Jim Cramer and all other guys that say, oh, this is too much. I'm a seller. I'm not a silverback. I'm like, why? For them, they don't have the information and they see, boom, this all of a sudden is effectively a blank swan because it depends from which side you see it. And most importantly, what it really baffles me is the professional analysts in the banks in particular, some out there. The best example is the complete amount of nonsense that has been said about the Bloomberg Commodity Index rebalancing, with everyone literally saying, oh, Friday's gonna crash. They need to sell like 20,000 contracts and whatever. And then, like, I check the number. I'm like, no, this is not gonna happen. This is not how indexing it works. The rebalancing for the people that were following the rebalancing first already happening. Second, that Bloomberg Commodity Index is more of a reference than a real tracker, like in the equity market, where you have a lot of strictly index linked passive investment vehicles like ETFs or fund.
Yeah, no, so nobody really invests in a Bloomberg Commodity Index ETF, so you don't need to
Exactly.
do it.
And you see social media, you see the banks, like high profile banks, the Financial Times, the
Yeah.
Wall Street Journal saying, short silver and gold and buy cocoa.
Yeah, and I think Citigroup in November or Citibank, they revised their silver forecast for it this year from 50 to 42. And then yesterday they revised it now from 100 to 150.
Yes.
I mean, it's crazy.
I mean, and then there was TD Securities strongly telling clients to short.
Oh yeah, with a stop at 92. I remember they told sell at
And
74 with a stop at 92. That stop
and
has
the
been
target price was 40 and the stop was hit in a week.
Yeah, that stop is long gone, isn't it? Right now, as we speak here, for the viewers, it's 8:42 a.m. London time, and silver is at 114.64. And
Yeah.
actually, spot gold, has traded above 5,300. We're now at 52.97. So, Dario, yeah, back in December, you said we could go to unimaginable levels in silver. Do you still hold on to that?
Oh, of course.
Prognostication. Yeah.
I mean,
So
everyone
I
now is
guess you're
asking
not
me.
shorting it, right?
Oh, I mean, first of all, people know I have been bearish on a specific type of stock and whatever because they're completely nonsensical, if not to a certain extent fraudulent. But what I told people, shorting is one of the worst risk rewards trade in finance because you are exposed to unlimited losses for a very limited upside. And everyone think that they can be the next Michael Burry, but Michael Burry himself said that was a one in a lifetime opportunity and he was lucky that effectively played out in a certain way. And that cannot happen anymore, right? So shorting in general is not a good thing. Either you go long or you stay away from something that you don't
Yeah.
like.
I think someone said once that the best way to go short is to have cash. I think that was Warren Buffett, something.
I actually I totally agree with that.
Yeah.
Personally speaking,
Yeah. Yeah.
when people ask me, "Oh, what's your target for silver?" I put out a piece the other day, and I said I don't know. I try to put together some model, whatever, but effectively things are developing in a certain way. And based on the public data available, that is the one I base my analysis, were already bad. But considering the speed this is happening and the fact that the overall crowd is still against it, because the moment that the large crowd figures out what's happening, the rush to get out their hands on anything that is physical silver is gonna be you know, completely insane and it's gonna exacerbate the problem. So what I shared with people is like, this is my framework that I simply try to understand when it's gonna slow down and eventually start to consolidate. So we talk about all the various drivers of the physical commodity balance between demand and supply because ultimately a price is a balance between demand and supply. And in a physical commodity space, you cannot print things out of thin air. You cannot print imaginary shares. You cannot print more money and so on, right? To fix things up. We're talking about physical. So there is the supply. There is the refinery that currently are clogged because the refineries are meant to handle that amount of volumes. That's important. Governments, what they can do? There's a shortage of silver is a serious national security issue because not only for all the consumer goods or whatever that I mentioned, silver is only in all electronic weapons, in like very high sophisticated defense systems and whatnot. And it's already into the US and China list of critical minerals. So what the government can do, saying, no, now we short silver, we open a new mine. What they can do exactly to
Yeah,
stop
not
this?
much. Yeah. So I
They
think,
can forbid people to buy in their own jurisdiction. In the past, didn't end up very well. And also, how can you stop this? And let's not forget, Silver is taxed everywhere. There is VAT and whatever. So they're already having like proceeds from this. And then what else? What else you can do? Ultimately, like perhaps the biggest problem to take into consideration is if eventually, like all these, people that are forced to buy the silver, they need to buy the silver, they run out of money to buy it. So that's the thing. But you have corporates sitting on a lot of cash after years of money printing and record profit and record cash flows or whatever, that they cannot afford to have a down quarter and see their stock price crashing on one side. And on the other side, you have a limited amount of physical silver. So, I mean, I swear to God, I'm trying my best since months and to think what this thing can stop. Okay, but the truth is that at some point there is not going to be anything left. So at that point, they have to consolidate and give time to the supply and demand to rebalance, and it will rebalance at very high prices. It's not
Yeah.
going to rebalance a low price. And when people say, "Oh, they're going to replace silver, it's going to be substitution, whatever," first of all, it cannot happen like this. Secondly, for many, many, many users, it cannot be replaced because
That's
it simply
true.
doesn't fit into the current design and level of efficiency for electrical conductivity you need. There are no alternatives. So, are they going to crash the economy and destroy consumer demand, and that maybe can ease things a little bit just because of silver? We had this year this US midterm election, and Trump made it very clear he wants the stock market to run hot. So this is not going to happen. What else? Silver price manipulation. Yeah, that's is gonna continue. People needs to understand that well, especially in such a very, very highly financialized environment with derivatives and retail without access to zero DT option and whatever, everyone trying to scheme profit and pickpocket like investors left and right and this kind of things. But ultimately, the driver of silver price is the demand for physical.
Yeah, I
And
know. I
physical
agree.
is less and less.
I agree with you. I think the silver manipulation game is has been like ruptured because people want physical now, and you've suppressed the price for so long that there's not enough supply. And I don't know if you agree with me. Maybe you can answer me, and then we'll wrap up. What I think, what I see going forward is that, uh, like you said, we're going to keep going higher to try to find a supply and demand level where things match. And along the way, there's going to be a lot of volatility, a lot of people out there calling people to short the market. But yeah, I think if you have physical silver or if you have miners or whatever, I think the best thing is to hold on for dear life, as I say.
Yeah, but for me, I live in Hong Kong. I sleep without any issue.
Great.
Even if the market, when I woke up the other day, oh, silver went to 117 and then it crashed all the way down to 100 and it came back. Earlier that day, I posted a chart and I told everyone, this is the price of silver and this is the threshold equivalent to SLV at 100. And I said, beware that the bullion banks and the brokers that sold, especially like coast there, they will try to defend that level with teeth and nails. Because if it breaks and start flying after that, they will be exposed to a significant monetary damage. And that's what happened. It kept going 4 days around the level. He had these big bars, then it come down, and then
Yeah.
like again, and then the game stopped yesterday at 1:30 p.m. Eastern time when the American options on the CME expired for the month of January. So they were really trying to keep the price down in order to bring it like at that level where basically like there is it's called like there is the max loss for the option holders where the highest amount of option expires out of the money as soon like 1 minute later boom it
Yeah.
starts
Yeah.
going up again. I mean, come on. To be honest, what shocks me is how idle has been the regulator so far in all of
Yeah, no,
this,
I know.
when it is so obvious,
I
and
don't,
there are precedents.
yeah, I don't think they understand what's going on. But anyway, Dario, it was really great speaking with you. We're gonna stay in touch, and I'm sure this is not the last time we speak about silver.
My pleasure, and have a nice day.
You too.
Bye, everyone.